I believe the most consistent trading strategy is focusing on beaten down, undervalued stocks. Today, we're going to talk about Surge Pays, ticker SURG. And if you kept up to date with my channel, you know we called this out at the end of 2023. The stock ran from $4 to north of 9. It broke a 3-year high, monster earnings. But I want to explain to you why I feel now is an even more advantageous opportunity to potentially go long in terms of upside percentage, especially when it's sitting at a 34 million market cap. There are a few factors that I want to consider. The first is the overall share structure, and we're seeing only 20 million shares outstanding. I'm sure a good percentage of that is tied up through the insiders and the institutions, which we'll talk about in a moment. The second is the cash position or the balance sheets. We know that analysts love to scrutinize companies in terms of their cash position versus their burn rate. Now, what I see here is over a year's worth of cash on the balance sheets. This is no dilution risk, no immediate need to raise capital and open up that share structure, which is a very, very positive sign, especially for anyone looking to potentially go long in the immediate future. Now, the other thing we want to consider is the biggest institutions, the largest global hedge funds. What is the smart money saying? When we look at someone like Vanguard, they are the biggest dogs in the world. They own almost 3% of the company. They are the largest holder, nearly 600,000 shares, and they just added almost 10% to their position. We see a bunch of other names like Geode, Bank of New York Mellon, BlackRock, just to name a few. It's great to see not only on the retail side, but as well as the institution, they are both seeing value and going long. Now, shifting gears, the most important thing financially and what the CEO stated in Q3 earnings is getting back to cash flow neutral. I believe that is going to be goal number one for the business, and I think they're going to be successful in the near future. Let's say Q1 of 25, we could expect to get close to, if not cash flow neutral. I think 2025 is going to be a bounce back year for Surge Pays. They've had a few hiccups, they had a few speed bumps, but overall, that does not define a company. And we're not even considering the government funding or that ACP funding. If that comes back in, the stock can literally surge to 52-week highs, no pun intended, which is why, again, I think it's right now a more advantageous period in terms of that upside percentage, that upside potential going into next year. So those are definitely things that you want to keep in the back of your mind, especially with a strong balance sheet. Take a look at January 22nd of this year. They closed on a $15 million public offering. They did 2.678 million shares at $5.60 a share. They did that with Titan Partners Group, and they acted as the sole book runner, which means they didn't go and syndicate the deal to 3 or 4 other lower level investment bankers. They put up all the money themselves, and they did it at a multiple of where the stock is trading currently at a significantly higher valuation. So if they feel that the company is this valuable or is that good of a deal to raise $15 million at 560 a share, you're seeing pretty much, roughly 2x, but I would say a minimum of 2x upside, if you really believe in this business that they're going to turn it around. So this is how I like to look at it from a long perspective, sort of as a hedge or a gauge or something that's forward looking in terms of what we could expect, right? We saw that they just parked their money there at 560 a share. We're sitting sub 2. So obviously it's a much better deal right now than what they got on this. So I'm very, very optimistic as a long. And especially when we look at what the analysts are saying, I think that's always a big deal. The low end price target is $3 over 74% upside. The median, $6, 248% upside. And the high, $9 price target over 423% upside. For me personally, I think without a doubt, the stock should be sitting at $4.35. I really like that number. I think it's a very realistic and achievable number. And just from that price, it's about 150% upside. I think that should be very likely, especially going into next year. But really, you want to give it 2 to 3 quarters. We want to see the fundamentals turn around, get to that cash flow neutral, have a path to profitability, right? This is a longer term swing. And I think, like most positions that have done multi 100% upside, it takes 6, 8, even 10 plus months for the stock to really flourish and really have that value recognized by Wall Street. So with Surge Pays here, it's had a lot of smart money in it for a while. There's people that know the name very well. Fundamentally, it was was a way different company, at the beginning of the year. So the fact that it has all of this upside, 450% upside now, I think should be even more, opportunistic mindset for someone that, has already put a lot of size in the company at a much higher multiple. Okay. So that's going to be the main thing. But like any play here that we have success with, it's always about the asymmetric risk. So when you look at the position currently to where you're actually would stop out technically, right, you're seeing 172 to 133. So that's pretty much like a 22% downside to have over 150% upside, so it's a 8x upside to one. It's incredible. You have to take that bet 9 times out of 10. And more times than not, I believe that hits. Again, if the company's good, if it does turn around, if all of the positive things play out. But the only other thing I would mention that you should pay attention to is the news, right? There's been a lot of things that have popped up lately on their radar, and I don't think people are paying attention to it. They just established a strategic agreement with AT&T. Right, they integrated their marketing platform with Clover point of sale system. They also did that with the PAX smart payment terminal. So there's definitely a bunch of new things that are keeping the shareholders engaged, that are leaving, again, investors very opportunistic moving forward. And that's what I'm excited about, is the company's not being quiet. They're not backing down. They're being aggressive. They have a plan. They want to get back to where they were, at the beginning of the year very badly. They're not getting complacent or comfortable. So that makes me feel good. Again, I don't run the business. This is not my company. I don't have any control of it. But from an outsider looking in, definitely something that you want to keep on your radar. As always, if you made money with this name or any of the names in the past, please feel free to let me know in the section below. And I know a lot of people have the next big trade. They're always trying to put me on. Look at this, look at that. Feel free to comment again in the section below what your top stock is if it's not already surged. But again, guys, thank you so much for watching. Have a fantastic night. And as always, we'll see you in the next one.